rates steady last week. So we'll see at the next meeting what happens, but I doubt it's a rate cut in March. And what that means for your investment portfolio, I guess Isaac will help close this out by teaching us something new, for one. And for two, it'll help give us more direction.
Do I start?
Yeah.
Oh, okay. Yeah, cool. Thank you, JT. That was fast.
You're welcome. No,
that was really interesting. Thank you. Now, a lot of you guys in the comments have been wondering, oh my gosh, what is the Amara's law? Like, I've been saying this constantly. What is Amara's law? What does it mean, Isaac? Can you please explain this to us? So we decided to, hey, give the people what they want. We're going to explain Amara's law. Now, why am I talking about Amara's law? Basically, in my work, we've been looking at this law because it explains a lot of how psyche works in policy, but it also explains a lot about how investment decisions are made. The law comes from a young chap back in the 60s named Roy Amara, and he's a Stanford graduate. Was it Stanford computer scientist. And he coined the idea that, or is really just an observation, it's not a law, it's more like an observation, that after an initial innovation is announced, you'll usually see a lot of speculation about the achievements that this innovation will lead to. And this creates what is called the hype train, or he calls it peak of inflated expectations, but it's hype. It gets hyped up. The reason for this is because when nothing's been delivered on an innovation, all you have is speculation devoid or detached from reality. And speculation detached from reality often leads to inflated expectations. Then once the technology is, being tested further, more news is being brought out from it. This could even still be before it's released. You then get initial, oh, this is not meeting my expectations. This is below what we thought was going to happen. There's some publicized failures. You fall into what's called the trough of disillusionment, where basically people are like, this technology is overblown. It's crap. This is like, we don't even think this is valuable. It's going to die, right? We hear that. Have we heard this before? Have we heard this, sort of dichotomy before, where something's super overhyped and then people are like, it's crap, But during this period, you still have innovations being made on the initial technology. And this is what is called the slope of enlightenment. Slowly, people start coming back to the technology as the lower expectations are now being met by more fixed realities and increasing realities where the technology is offering more benefits. And you end in what's called the plateau of productivity, where the new technology has now been mainstreamed. It is matching what people expect it to be matching. People are now, the reality of what the technology is now basically conformed with public perception. How you can kind of see where this comes from is it comes from this observation that is made between the difference between human expectation and technological development. If you guys know what Moore's law, but I'll explain it. So Moore's law is basically it's an observation also. It's not like a law, but it's an observation that was made back in the 60s that had to do with the number of transistors on a semiconductor. And the number of transistors, it was noted, was doubling about every year, okay? That has since been revised to like 18 months to maybe 2 years. But the idea was that we're seeing a doubling of the number of transistors on semiconductors within the same space, the same size. And this was leading to the increase in computation. And the curve that you notice, if it doubles every time, is an exponential curve. So computation doesn't grow linearly, it grows exponentially. And this is not only true with computers, but is actually true with a lot of different innovations. There was a book written on this that was called The Law of Accelerated Returns by Ray Kurzweil. And he talked about how basically technologies compound on themselves. And when you initially get a new technological innovation like a semiconductor or something, or you get some sort of new way of putting information onto a handheld device. It's a lot easier to move from that to a smartphone, and then from a smartphone to applications and to all these other things than it is to move from the initial point to the smartphone. The point is that the technology compounds on itself. So you see, instead of a linear growth in technology, it's a compounding growth. It's an exponential growth. And because people often think linearly, and there's a book on this that is called How to Create a Mind by the same guy, Ray Kurzweil. Ray Kurzweil talks about how people don't think exponentially. And actually, it's very hard for people to conceptualize exponential growth. People really only conceptualize things in a linear fashion. And you can think of this logically. Like, if somebody were to tell you that by 2026, the average startup cost or upfront cost of an EV will be cheaper than the upfront cost of a combustion engine car. If you were to tell somebody that now, that's not as crazy. People are like, okay, I see that EVs are becoming very popular. I see them all the time. But if you were to tell somebody that in 2016, they think you were insane. But people were making these predictions in 2016. But people didn't believe them. People were like, that's overhyped. That makes no sense. And why do people think that's overhyped? Because they look around them and they don't see the wide adoption of EVs. They don't see the wide adoption. So they're like, I don't see how it's going to get to such a high adoption rate within this short time frame, because I think linearly, and everybody does this. They want to see it, the linear projection. And because of that, you often see this overestimation of products, where you see this right here. The human expectation, when you think of what the technology can achieve, you overestimate it early on. And this overestimation is what we see when we see the hype, this inflated expectation. Then it falls into the trough of disillusion when these expectations aren't met. But then we slowly get back to reality as the human expectations begin to converge with the actual technological impact. But then that's when we see the underestimation. We then in the future underestimate things. So what does that mean for anything that we do? It means everything for any sort of investment. Investment is very much hype driven, and hype will determine a lot of what the price action is on different investments. But I think that the issue, as you as an investor need to break through on a lot of these new innovative things, is you want to make sure that when everybody else is overestimating something, you see the reality of it. When everybody is underestimating something, you see the reality of it. So you are able to, instead of thinking linearly like the masses and falling for hype and then also falling for disillusion, you're able to think exponentially and see the potential of products in a more realistic manner. And Warren Buffett actually talks about this in his book, The Snowball. And you think about that, what does it mean for something to be a snowball? Why did Warren Buffett call his book The Snowball? A snowball is something that compounds. It gets bigger and bigger and bigger on itself. It becomes, and it grows and it compounds. So when Warren Buffett talks about investment, he talks about how you need to invest within exponential thinking. You need to think of things as a snowball effect, So I think that basically sums up the main points. And I know there's maybe some examples that you guys might want to get into. Just,
we did a video on this actually. How our brains can't conceptualize exponential growth. And I just want to add, Ray Kurzweil is one of the great minds in AI. So he would be a great author if you guys are into books. He talks about the singularity a lot.
A perfect example of this is crypto and AI. If you guys go back to 2017, you had these ICOs launching and everyone thought that everything was going to be tokenized back then. And then once it didn't happen, and this was people overestimating it. Then once it didn't happen, people were like, oh, crypto's dead. But now this recent bear market that we just kind of went through / are in, it's a weird bear market. You saw something different. In 2017, you heard about Goldman Sachs and all these large major financial institutions saying that they're going to have Bitcoin products on their trading desks, all types of different crypto products. They rolled them all back. But after the 2021 bull market came to an end, you actually saw these large companies, Walmart, Fidelity, filing for more patents and actually still building out their crypto initiatives. And now, we're kind of getting close to the projections that people are, hoping for. We have a Bitcoin ETF. We have like some of the largest, not some of the largest financial institutions in the world becoming a part of crypto. Same thing with AI. It's harder to predict where AI is on the spectrum though, just because it's not like crypto to where like, it's just different. Like you can't see all of the AI products.
Yeah. I think we're still in the hype phase.
Yeah, I think
for AI.
Chat GPT and everyone's thinking like, oh, AI could build a website. Like, and you see all these jokes like on your pitch deck, like who's your whole team? And it says Chat GPT for every single position.
Yeah.
And it was also the fastest app to reach 100 million users. So everyone thought like, oh, AI is about to take over everything. When I would say people have been working on AI. I can't even say people have been working on AI products longer than like cryptography, because cryptography goes back to the ancient Romans. So that is probably older than artificial intelligence, but it's just a good way to look at it. Like once people are like it's not a bad idea to go against the idea that most of the masses have, because most of them are wrong, because they look at like mainstream media, which is designed to keep you in an ignorant state. So you just got to be able to look at it with your own brain. That's good stuff, Isaac.
So I think on Bitcoin, Isaac, let me ask you this. Can that chart be cycled? Meaning like, can that same cycle take place on one asset or one technology?
Yeah, I was wondering that too, because I was thinking with AI specifically, AI has been overhyped in the past too. Like you got to think about the initial computers and expectations that people had for computers back when IBM, was making all the mainframes and stuff back in the 50s and 60s. People thought back then that we would have AI, like that we would have like, humanoid machines and all this other stuff. And we didn't get that. So then we got this brought down to reality sort of moment. And I don't know, I kind of am of the opinion that this thing can cycle through with different innovations, but maybe along the same, technology.
Yes. So with Bitcoin, I would say we're still actually in a hype phase. Believe it or not, I would say that. At the end of the day, El Salvador made it a legal tender, bro. It's a horrible currency. If you actually had your minister of finance or whoever is looking through and making this decision ultimately, or letting you know like, hey, this is a good move or not, they definitely see that this doesn't make a great medium of exchange. And I think the only reason that they did that is because then obviously we were in a hype train. It was in a bear market, but still hype train. And I think still we're overestimating, as I said on that chart, the capabilities or the eventual use case for Bitcoin, which ultimately it is going to be a store value like gold, I believe. But we're ascribing other things to it, like currency, the ordinals, and all this other stuff that we're trying to accomplish, but that it hasn't been sustained. And so I would say even on Bitcoin, we're still like not in the beginning of that overestimation phase, but we're getting close to the middle in which it'll start to shift.
I agree.
Yeah, I mean, I was kind of thinking about that too, because I was thinking like crypto is definitely still like in its infancy when it comes to use cases and all these other things that it could do. And I don't think we're quite at the point where crypto's true potential has been realized. In looking at the curve, you generally get to the underestimation point when you see a lot of growth in the actual application for the technology. And I don't know if we're like quite there yet. So I kind of concur in the sense that I think we still kind of are in the overvalue period, So yeah.
We got to get you a shirt that says that. Well, that's your motto.
That's my motto?
Yeah, that's your motto.
Do people think this about me?
Oh man, that's a horrible motto. That's like
that's a terrible
motto, but like slogan or something. I don't know.
Okay. I'm like, man, he just concur with everything. That's horrible.
Oh wait, I concur. Did I say it?
Yeah.
Oh shoot! Wow.
You didn't even know you said it. That's
I explained why I concurred though. Like it's
No,
not
it
like
makes-
I'm talking
when
out of
you
my
say
ass.
it- when you say it, it makes sense every time. It's not that you're just like spitting it out. It's just funny as fuck.
Yeah. What's the synonym for concur?
You must have heard it like on a show or read it a lot recently, because you're definitely going through a phase in which you're saying concur a lot. I know
I've always said concurred. People
oh,
say
it's not a phase. Okay,
this is my first word.
really?
Oh, I got a new thing I'll say instead. I'm gonna say I'm in accord.
Oh my!
That's pretty good too.
Oh man! You got
No, that's good stuff, man. I just think it's funny.